guys, today is December 7th, 2020, and futures pointing to a lower open, and not surprisingly so, because we've been running for days up and setting a new record after new record. So looks like we're gonna open lower, but in general, mounting coronavirus cases, and this is not good news. And 7 days averages are 200,000 cases and 2,000 deaths. So that's bad news. But in general, President Trump and Senator McConnell are ready to support a $900 billion stimulus package, and that's good news for the economy. And also Pfizer and BioNTech were approved in UK, and UK is preparing to roll out this vaccine on Tuesday, and UK is going to be one of the first countries to do so. Okay, so let's jump to SPY ETF for S&P 500, and it looks like, to me, that SPY could still go higher, especially actually QQQ, which is Nasdaq, also set to go higher. It's not overbought or anything. I see people on CNBC and Bloomberg, and they're just criticizing this move and saying that the market is overextended, and that could be true, but doesn't matter because there is a lot of liquidity out there, and people are just waiting to get into this market, and obviously people have a lot of money, and it looks like we're still going higher. So let's jump to corporate news, and before we do that, if you want to see my trades on pretty much everyday basis, you can check out a link to my Patreon club in the description. Okay, so let's start with DocuSign. Okay, so DocuSign shares were higher after a company posted better than expected results and issued upbeat guidance on Friday, and pretty good numbers from DocuSign, and a lot of analysts upgraded the stock. And in general, it looks pretty good to me. It's dropping pre-market today, like a lot of stocks right now, but it would be an interesting buy for me if it goes like into 30s area, like a mid to 30s area. So that's DocuSign. Okay, another cloud company is Cloudera, a very interesting company. It reported really good results. Shares were higher 12%, and after they beat their revenue and earnings, reported 217 million versus 209 expected, and earnings per share were 15 cents versus 9 cents expected. And I actually liked this company, and I like the results from this company. And if this stock comes down after on this day, because markets will be trading lower, I would be grabbing this with both hands, okay, because it's not overbought or anything. And if it comes down to like closer to $12, I would be buying it hand over fist. Okay, another company, Marvell Technologies, Marvell Group. They fell 4% on Friday after Summit Insights downgraded the company to hold from buy. And in general, I'm neutral on Marvell. Marvell is a very good company. Don't get me wrong. It's a great company, and it's probably a good buy even here. But I would like the shares to come down even lower for me to buy it closer to $40, and that would be an interesting buy for me. Okay, Stitch Fix. Stitch Fix shares fell 2% after MKM Partners downgraded it to sell from neutral. Ouch. Okay, in general, Stitch Fix, in my opinion, is traded too high. Like it went as high as like $42, and now it's trading around $35. And right now there is a support area around $34 and $35. If it breaks this support, in my opinion, this could fall further. So I wouldn't want to buy shares right now. I want to see if this support can hold. It's pretty much sitting on a 50-day moving average support line, and if it breaks, like I said, this could go like under $30. Okay, Ulta. So Ulta Beauty shares fell more than 30% on Friday after company reported a net sales miss. Its net sales came in at 1.55 billion versus 1.56 billion expected. Same-store sales fell 8.9% in a quarter. So in general, I actually think that Ulta is trading too high, and looks like Magda is crossing here. So I think the shares will fall further, and I wouldn't buy Ulta at this point. I would wait for them to come down lower and under 200, under 270, and low 260s. I would say I would be interested in Ulta again, but not before that. Okay, PD. PagerDuty. So PagerDuty is another cloud company, and jumped more than 26% on Friday after reporting results that beat analyst expectations. Reported 9 cents loss versus 10 cents loss expected, and revenue was also above. And shares are jumping a lot for PagerDuty, but it's right now it's sitting in overbought territory, and I would like to for these shares to come down a little bit before I buy it. So PD is for now it's a hold for me. Okay. Speaking of jumping, LAZR, which is Luminar Technologies, it's a company that develops the LiDAR for autonomous driving and advanced driver assistance systems. It rallied 37% on Friday, doubling in 2 days after becoming a public company. And in general, right now it's sitting like in huge overbought territory. And I don't know. I mean, I would be very careful with this company, LAZR, right now, because it's been trading up like crazy. Like I said, doubled in 2 days. So I would wait for the shares to come down at least in like $25 area, $26 area before I consider LAZR. LAZR. Okay, Kodak. So Kodak shares are jumping this morning after government watchdog agency found no wrongdoings in company's planned loan to produce drug ingredients for U.S. government, a transaction that was halted due to controversy surrounded, because as you remember that it was a big controversy about the CEO receiving options right before the announcement, and the other executives receiving options before the announcement about the loan from U.S. government to Kodak, and Kodak shares went up as high as $60. It was crazy. And right now shares are trading much higher, but you have to remember that this is just a letter of intent from the watchdog, and we still have government investigation and Security and Exchange Commission investigation. So I would be very careful still with Kodak shares. I know it's exciting, and I know it's a good news for Kodak, but I would be still tempered with my expectations of how high this the shares can go. So I will just hold on to this. Okay, Apple. Okay, so Apple shares are trading higher after it reported that it's planning a new series of Mac processors aimed at outperforming Intel's fastest chips, and these chips could be available in 2021. And in general, Apple shares are set up pretty well into the holiday season, and I would be buying Apple at these prices. 122 right now it's trading pre-market like close to 123. Even at 123, I think it's a buy. Apple is a buy right now. Okay, speaking of Intel. Okay, so Intel went up tremendously. It actually it's been trading up for days, and after the bad news were priced in, the stock went up on a huge run, covered this gap right here, as you can see, and right now it's sitting in overbought territory. So I would be actually selling Intel right now, because I think it ran up too much, and I think it could come down a little bit. So I would be careful with Intel if you are interested to buy it. JD.com. So JD said it had become first online platform to accept China's new digital yen currency, and in general, Chinese stocks are under pressure recently because of the recent bipartisan law that required Chinese companies to conform to U.S. audit accounting standards, and these companies are under pressure. But in general, I mean, JD doesn't look too bad on the chart, and I think it would be an interesting accumulation point for me for JD. Okay, Lyft. So Lyft is as you know Lyft, and you know Uber, but Lyft was trading higher after it was upgraded to overweight from neutral by Piper Sandler, raising price target to $61 from $39. And Lyft shares actually look pretty good, except for their a little bit overbought for me, so I would like them to come down to buy it right now. But in general, overall trend is up. As you can see, this 50-day moving average crossed to 100-day moving average, so I would be interested in Lyft, but a little bit lower. Okay, and finally Exxon Mobil. So a lot of people are asking me if it's time to buy some of the oil stocks, and in general, and I mean, Exxon looks pretty good to me. I mean, it's facing a threat of a proxy fight from activist investor called Engine Number One, and the firm said this activist investor sent a letter to Exxon to focus more, in which it says that it needs to focus more on clean energy while cutting costs to preserve dividend. And I actually like Exxon's shares, and generally I don't like oil companies, and I think they're radioactive. But right now, Exxon and CVX is the Chevron. Those are two companies that I would still trade in the oil cohort, and I think it may still go higher. Exxon Mobil. Okay, that's it, guys. Don't forget to subscribe to my channel and click the like button. I'll see you Thursday.